A lot of individuals think that they can watch some YouTube videos or read some books and start trading cryptocurrency and all of a sudden be a multi-millionaire in a few years. And that's like quitting your job, going to America, play basketball every day and get a contract in the NBA and you're 5'8". It's just impossible, right? And if it could be done, I'm sure Elon Musk would have already created like some sort of AI bot or some sort of market prediction tool. I think that it's an investment class. It needs to be treated that way. It's not the one and only thing. It can be part of a diversified sort of portfolio.
Hello and welcome to another episode of Ways to Wealth. Today I am joined by Tim Doyle. Tim, why don't you give us the TLDR on who you are and what you get up to on a day-to-day basis?
Cheers, Charlie. Thanks for having me on. My name's Tim. I'm the founder of a company called Doyle Accountants. We're chartered accountants and we specialize in cryptocurrency tax for traders and investors. Since 2017, we've filed over 2,500 crypto tax returns, and we work with probably about 200 clients who each have more than over $1 million of crypto. We've filed hundreds of sort of voluntary disclosures, IRD risk reviews, and audit responses. And with that kind of client base comes a whole nother area of accounting and tax and wealth planning around some high net worth individuals, people who contract and receive cryptocurrency for payment.
Yeah, that's quite big.
Yep, particularly with international companies and all sorts of stock options that come along with it. So that's what we do.
Yeah. So when you say crypto tax returns, is it clients that have crypto and that's their tax return, or is it in a different form?
Yeah, it's mostly individuals who have purchased cryptocurrency. They've either acquired it more recently or in some cases back 2012, 2013, but they, for some reason or another, they haven't been aware of their tax obligations. So they come to us and we've got a sort of good process to get them sorted, to get them compliant, to give them clarity on the tax rules, to pay less tax, to make more money and get ahead faster.
Right, okay, that's cool. So obviously you didn't start in crypto as your main thing. Maybe you did, but I, from my understanding of a bit of your history, like obviously you went down the accounting path, and that would have been towards more traditional environment. So what's that like?
Yeah.
What was that journey like, I guess?
Yeah, well, I started in an accounting firm in 2010. And previously, before that, I actually studied sport and exercise science and physiology and nutrition. So it was quite a different path, and that was really to keen on business and making money, right? That's what fires me up. That's what I really enjoy. So accounting was a pathway to kind of achieve that. Then, like most people, most accountants, I got my CA. I buggered off overseas to London for a couple of years and did some interesting work there. And then I came back to New Zealand in 2017. And then a year after that, that's when I purchased shares in the business. Came back, there was 3 of us, and we grew that business to a team of 26 staff, which was pretty exciting. Yeah.
So the business was already existing?
Yeah. So I'd worked for this particular partner previously, and then when I was in London, she said, "Oh, why don't you come back, work for me? We've got some exciting opportunities." So I came back, worked with her for a year, and then after that year, there was they were sharing office space with another elderly accountant, and he retired, and I purchased his practice, and we merged that together, and then off we went. And I think just the crypto sort of side of things came in being a personal interest of mine in 2017 when I was making a lot of money from crypto and then losing it all and then having tax issues. And I thought, well, hang on, if I'm in this situation and I'm a chartered accountant and I can't figure it out, then there must be other people. And then it's just sort of snowballed. And we've been really fortunate enough to work with some big companies like Easy Crypto or some really high net worth individuals who have made some significant amount of money in crypto and also had quite some complex IRD situations as well. And I think once you niche into a particular industry, you start to sort of snowball your knowledge, and you're able to utilize knowledge that you acquire from one client onto another client onto another client. And by going an inch wide and a mile deep, you kind of get to know that particular area really, really well, so that no stone's unturned, and you can become a sort of a specialist or an expert in that particular area. And that's what we're fortunate to be able to do. But a lot of it's been right place, right time. We know what's happened with the crypto market, and the result of that is some people making some significant wealth with some significant tax obligations, which we've been able to help them through.
Yeah, that's cool. And now you are just only, like, you personally, I imagine the entire practice does a lot of,
yes,
a lot more of a well-rounded kind of approach to kind of business cases that you serve. But are you focused, like exclusively on the crypto, or is it still?
No, definitely not. It's not quite at that sort of stage yet, but that's certainly where a lot of our growth is coming from. So we've got a team of 13 staff. Probably 3 of them are full-time dedicated on the crypto. Then I've got an EA, practice manager, tax, and then we've got 5 or 6 senior chartered accountants and 1 intermediate and junior accountant, and they predominantly deal with our commercial arm of the business. So that's small, medium businesses around New Zealand, or in Cambridge and Waikato, farmers, trades, property developers, rental properties, trusts, investments, sort of mergers and acquisitions, estates, all that kind of more general accounting. And we're able to offer that just because of the size and the scale. But certainly that crypto side is heating up. With IRD crackdowns, with the growth that's been involved. But I definitely enjoy a lot of the mergers and acquisitions, or the restructuring side, or some of the more commercial issues that go on in the normal side of the business too.
That's cool. Yeah, no, interesting. So was it because you are very close to the cryptocurrency space, you've been working in it, you've now been obviously serving customers from a tax perspective. Obviously you can serve someone's tax without necessarily having a view on Bitcoin or on cryptocurrency, but do you have a view on the industry? Is it like an interest? Are you, I guess, are you taking a directional bet in your own kind of views on kind of the space?
Yeah, look, I think it's our future financial system of the world. I think that depending on who you talk to, some might mean it's the future financial system of the world, but I think it's going to be in parallel. I don't think it's going to take over the traditional system yet anyway. So I think my view has changed on that over time as well. I think previously, like if you wind back the clock 7 or 8 years ago when I first bought Bitcoin, I was a lot more bullish and a lot more excited, but that might just have been a maturity thing as well. But I just fundamentally, there's so much volatility in the markets. For every person making significant amounts of money, there's also people losing money too. And to be able to stomach the volatility is one thing, but I think too that a lot of individuals think that they can quit their jobs, watch some YouTube videos or read some books and start trading cryptocurrency, and all of a sudden be a multimillionaire in a few years. And that's like quitting your job, going to America, saying you're going to learn and play basketball every day and get a contract in the NBA and you're 5'8". It's just it's just impossible, right? And if it could be done, I'm sure Elon Musk would have already created like some sort of AI bot or some sort of market prediction tool that's just beyond us. So I think that it's an investment class. I think that it needs to be treated that way. It's not the one and only thing. It can be part of a diversified sort of portfolio. But it's creating opportunities. Yeah.
Yeah. So, I mean, look, what it does is it creates I think first you have to go, well, what race am I running, right? Because, there's no magic machine that's going to beat the market continuously by trading. And I like the analogy of sports because at the end of the day, the people that do that as a profession and take it seriously are 1, very disciplined, 2, very knowledgeable, and 3, have to deal with extreme amounts of pressure to perform. And many fail. And that's the reality of it.
The traders that we do have that actually make money is a very, very small minority, and they are, to put it politely, they're just kind of a different type of person. This sounds a bit strange, but you don't have a conversation with them. Their mind just right. They're just a really unique type of personality person.
Yeah.
They're incredibly
And
intelligent.
that's not new. That's not new to humanity either, right? This existed before cryptocurrency in commodity markets, metal, equity derivative markets, etc., currency, etc. So this is not new, but it is a black box. I think the worst thing I see in the industry, in the crypto industry, from a trading perspective especially, is you have to be able to trust your broker. And a lot of those perpetual trading platforms and those high leverage platforms they're making money from what you're doing. Like, they're monetizing your speculation. So expect them to not play by fair rules, especially as they're unregulated.
Yeah, I think that, but also I think that our most successful clients and those that have multi-million dollars of crypto, they have literally purchased some tokens, they have a handful of tokens, and they haven't touched them. They're not playing the games on those particular platforms. It's like you mentioned, they've got the discipline, they've got the long-term vision and strategy just to buy it and never touch it. And for those that are sitting on several Bitcoins from back in 2016, 2017, or even like 21 or so, those are the types of clients who are making significant amount of money. They don't have that issue that you've just described. They don't have tax issues. They don't have compliance issues. They've got no risk because they haven't sold it. And it's like, you're not going to buy and sell a house every day.
It's expensive to operate as a trader in many ways, especially in crypto. But also, I would add the fact that the dynamic of, you're not just buying an asset that you believe has a store of value and is kind of going to be one of the future kind of fiscal systems that exist in the world.
Totally.
You are a speculator.
Yeah, but there's a lot of sort of excitement around this kind of future financial system with things like DeFi protocol lending, and like to be able to take an asset base to lock it up and to have some sort of provided as collateral and take lending, like some of those kind of advances in that fintech space are really exciting. Yes, they've got a few issues, but it is quite cool to be a part of. But again, you've got to kind of have the right reasons for, I think, using them and utilizing them, not necessarily trading or swapping tokens and trying to beat the market.
Yeah, absolutely. I mean, there's the portfolio approach, there's the central banks obviously acquiring more, or at least having it on their balance sheets, and that could be because they've confiscated it, right? They may not have purchased it or purchased all of it. So that's important to note, I would say.
Yeah.
And like you say, those people that have taken the portfolio approach haven't played with it, haven't had to think about tax complications and I realized these gains here, and here because they bought 7 Bitcoin and then they just left it. Similar to gold, I guess.
Yeah, exactly. Yeah.
I kind of that resonates with me. So so did you always know you wanted to be a partner of a accountancy firm? Like, did you know you were going to go down that equity path, that ownership path?
Yeah, I knew pretty early on that I wanted to be a business owner. I think that sort of came from growing up. Our family, we weren't poor, but we never kind of seemed to have enough money, or at least that was my impression, or that sort of belief that I got involved in. And my parents would bicker and fight about money, and there was never enough. And maybe that's because I'm 6'4" and eat a hell of a lot as a growing boy doing all these sports growing up. And look, I never went hungry or anything like that. But there was never enough to kind of go to family holidays extensively and stuff like that. Well, that was So I always knew that I wanted to make money, and business was obviously the sort of pathway to do that. And it wasn't really until I was at university and I worked at a shoe shop selling sports shoes, and the business owner there was was just really entrepreneur, right? Like he sort of taught me that, hey, I can buy these shoes from the supplier for $70, and then I'm on the shop floor selling them for $300, and I'm getting paid minimum wage, and he's just collecting the ticket. I'm like, well, hang on, why can't I do this? Why can't I use leverage of time or leverage of capital to do that? And then I sort of thought, well, hang on, the best way to do that is probably by learning from other people, and what better career to actually do that than in accounting, where we're in quite a privileged position that we're able to see behind the scenes of thousands of different business owners and see how much money they make, what they do, but then also talk to them and figure out like what type of person are they, what ticks them, what drives them, how do they make decisions, what do they do well, what do they do, what do they struggle with, what kind of bottlenecks do they have. So that's what really got involved in me becoming an accountant, but also as a pathway to become a business owner. And now I think that's sort of changing. It's more around how I can make an impact with our clients, how I can make an impact with our team, and how can I give back as well and share some of that knowledge too.
Yeah, that's cool. Yeah, interesting. And what's the other sort of kind of business ideas you've had in the past? Have you thought about, were there any other crazy ideas that were a bit left field of accountancy and accounting?
Not really. I guess my mind kind of works in frameworks and systems. So I've got this kind of, I like to think there's this kind of systemized approach, and then it's how can I roll that out against other businesses. So there's a few that I've kind of looked at around maybe a moving company or typically a
Right.
service-based
Yep.
business. And I think with a service-based business, like don't don't ask me about hospitality or retail. I think those are quite different beasts to kind of tackle. But with the service-based businesses, they typically have the same sort of issues, right? Like the owners normally involved, the owners are bottleneck. They start off small, they say yes to everything, and then as you grow, it's actually what you don't say yes to, and it's actually having a core product that is systemized that can be delivered without the owner. And in some ways, like our accounting business is no different from that. So if I talk about that crypto service offering, we have a standardized system that every client follows the same process. So if I'm not here, one of the team can step in, and that's been able us to scale it from just me to now four, all going through that same process. And we're taking something that's quite complicated with many moving parts, but it still goes through the same system. So having a
Right.
core product that's not bespoke, that's standardized, that's quite key. And it's for me, it's still always looking at what other businesses can I apply that kind of methodology to. Of course, easier said than
Yeah.
done.
Yeah, so like kind of taking the basically the same playbook that you've been doing with the accountancy firm, and that's because you're confident and you know how it works, rather than jumping into maybe something that has different kind of complexities, like I guess manufacturing and hospitality and retail
Yeah,
that
well,
have inventory and different things like that.
yeah. Yeah, exactly right. So I think with a service business is, and it also depends on the team size and where you're at now, because the ways that you run a business is different. So for example, if you're less than $200,000 revenue, you want to take on every single client that you can get. You want to be involved in it. You want to do it. But when you're at maybe 2 or 3 million, that's the chance that you want to be more of an owner and a director and have other people doing it. So what got you to $500,000 in revenue isn't going to get you, if you keep doing that, it's not going to be the same playbook to get you to 1.5 million in revenue. There's different playbooks and different issues at different levels of business. So it's having an understanding of what where you're at and also where you want to go. Like some people are happy with maybe $500,000 of revenue, 100 or 200,000 coming out the bottom. Like that's our
Mm.
traditional normal client, and that's great. Like that's a good solid income, and it's not up for us to sort of tell the business owner where they want to go. That's up for them to kind of decide. But if they do want to grow their business, if they do want to get to 2 million in revenue, if they do want to have a successful succession or exit, then there's certain things that they can do, or there's certain levers that they can pull off. And the most obvious one is removing them from the operations and putting in place team and systems and structure. And
Yeah.
it's difficult and
Yeah.
it's challenging and it's firefighting and it's one step back, two step forwards, but it is
Yeah.
possible. Yeah.
Mm. Very good. So that's actually quite an interesting one. Like, let's say you actually have a service-based business. You're lucky enough where you're drawing let's call it $500,000 of revenue, maybe 500,000 to $1 million. And like you say, maybe you're drawing, there's profit in there, real profit in there of about, let's call it, two to 400,000, right? You know that you're going to probably be operating in that structure for the foreseeable future, right? And billing that service through that structure until you retire. You recognize that perhaps you might be able to get some introductory referrals at the end, but the business is most likely going to be liquidated and wound up, perhaps. You don't have an expectation for sale, but you want to prepare for wealth and you want to build wealth. We hear a lot about, Bitcoin treasuries. We hear a lot about treasury companies. Is there conceptually efficiencies with, instead of drawing dividends, someone that was going to operate for a vehicle could essentially more tax efficiently build up an asset base that will eventually be liquidated upon the liquidation? And have you thought about that?
Yeah, there are structures, but the thing you've got to remember with every structure is that it comes with extra costs, compliance costs, risk, and it needs to be worth it, and it needs to align with the business owner's goals. At that kind of level that you've described, a holding company structure probably isn't worth it. But when a business owner is making $3-4 million a year, then yes, having a holding company can be worth it. And a holding company is a company that sort of intersects between the trading entity and the ultimate owner, so it holds the shares. So that situation I'm describing is a trading company which is owned by a holding company which is genuinely owned by a trust. And the reason for having that holding company is you can park profits there at 28% tax rather than them going straight to the trust at 39% tax. So you defer the 11% tax. 11% tax on $1 million, $110,000 every year, or on every $1 million of profit that you can defer, but you need to make those profits to be able to defer the tax. So that's definitely one strategy. But if you're making $200,000 to $300,000 per year, you're only going to get tax savings above $180,000. And when I say tax savings, it's not a true saving; right. It's just the deferral. So I think if we talk more, if we just go back a step, it's more sort of a broad principle that I think of is that to create wealth, you need to own equity, or you need to have some sort of ownership. So you have a high-paying job, a high-paying cash cow of a business. You pay tax there, and then you take the after-tax profits. And in New Zealand, it's traditionally been by property, which has always increased in value.
And now there's a whole new thing.
Yeah, and now it's like, okay, well, what do you do with that? Do you buy commercial property? Do you buy shares? Do you buy crypto? Do you buy venture capital? Do you buy gold? Do you buy there's so many opportunities, right? But I think that depends on the individual. I'm probably not one to give financial advice, being an accountant, not a financial advisor, but there's multiple ways to skin the cat. But what we are seeing is that the world is moving towards digital, intangible kind of platforms and wealth. And by that, I mean not only AI, but if you look at the assets of the world, like previously it might have been like farmland or a tractor. But now if you've got 1 million followers on Instagram or 1 million people on your email newsletter, you could probably make a couple of $1 million just from those intangible type of assets. And not only that, but you can jump on an airplane and you can move to Dubai, a tax-free country, and all of a sudden generate income from over there, and you're tax-free. So and an email list and social media followings enable you to do that, whereas you can't pick up your land, or crypto, enables you to do that as well. You could take your crypto from New Zealand to Dubai, sell it in Dubai, cease your New Zealand tax residency and not pay taxes. So the assets in the game is moving, right? It's moving from this sort of industrial age, from this farm age, to these new digital assets. And I think that's something that more people should be considering, and how they can maximize those opportunities as well. But like your podcast, it can be scaled. You do it once, or software, provided that it's relevant to the jurisdiction. It's all this digital, or AI. It's all this digital, intangible, movable assets that people are going to vote with their feet around what jurisdiction they want to pay taxes in, where they want to live, and how they want to operate their world.
Yeah, totally true. Yeah, so I guess you've kind of established a pretty nice base. You've been in the partnership and in the business for a while now. you're growing your voice, you're growing the intangibles within your own kind of personal brand, right? And I often say, and I'm not an accountant, but I think about your income is an asset that you should almost consider like on your balance sheet, and it's probably worth a few years of actual salary. So if I've got a $200,000 job, is it worth 2 times that because I know there's a high certainty that I'm going to get that cash flow into the future? Because obviously, if you give up that $250,000 job and you go and start a startup when you're not prepared or you haven't got everything sorted, that's a huge shift in the balance sheet and in the kind of security that you have and the ability to survive.
Yeah, I think if people are thinking about creating a startup or leaving their sort of employment to go to do their own thing, I'd probably approach that differently. Firstly, I'd suggest that they have about 6 months operating expenses or monthly living cost in their bank account, and that's a buffer. And then they know they've got 6-month runway. The reality is that they're going to have more than that because hopefully they've started to generate some revenue by months 3, 4, 5, 6 to start coming in as well. And people are normally going to make that decision based on pain or pleasure. They're going to move away from pain. They're going to move away from the mundane, the boringness, or whatever it is that they don't like about their job, or they're going to move towards the pleasure of loving what they do. Definitely pain is more of a motivator. You're more likely to go see the doctor if you're sick rather than go see the doctor for an annual checkup. So pain's the motivator. But the way to do that, like I said, is to have that emergency savings and then put together the plan of what success looks like for you and actually have a business plan on how you're going to do that. I think sometimes it depends on the individual and how much background and how much experience they have, but you might need to test certain things, but there's certainly shortcuts that you can make, and it's quite industry specific. But and also what you want to do, is it an IT business? Is it a SaaS? Is it a traditional service-based business that's geographic? Or is it retail or hospital? So don't get into hospital, but like there's different playbooks based on different industries, based on different goals. If you wanted to create a $100 million next NZX listed company, you'd probably approach that differently in terms of raising capital and getting experience on a board compared to going to start something from scratch by yourself as a sole trader.
Yeah, for sure. And for you, what does that look like for you in the next kind of 5 to 10 years?
Yeah, look, I'm still sort of working that out myself. I think if you had asked me a couple of years, even 2 or 3 years ago, and you said, "Oh, you're going to be in the position that you're in now in 3 years' time," I'd be saying, "Oh, get out of here, no way." So we've been really fortunate with the growth that we've had in our business, and that's been unexpected in some ways. Like I said, I've been quite lucky in right place, right time with the right market conditions and the right getting into crypto myself early and having our positioning there. So I think that in some ways we've kind of got all the right 3 factors getting there at the right time. What I'd like to do next is potentially acquire another accounting firm, whether that's in the Waikato or nationally. That would be quite exciting. But I'd also like to, and we are going to launch this later this year, probably closer to the end of the financial year or in April, sort of a business advisory type of service offering. And that's where we take our clients through, are they trapped in the business? Are they stuck into the day-to-day? Are they overloaded? Are they overburdened? And really transition their business from being an operator to being an owner and being a business that's worth owning, and taking their current reality and deciding what that future version of their business looks like and putting in place a plan and implementing that plan to help them achieve that, so that they have operational freedom. They can it's going to be worth their time, it's going to be worth a lot more, so they could choose to to operate it or to sell it. Because the reality is in New Zealand that 80% of business owners would be better off, like they're just in the weeds, they're just grinding day to day, they're stressed, they're risking burnouts. There's only a really small percentage of business owners who make it, and we're wanting to make an impact there and help those types of business owners who want to get out of the weeds and really create that business that's worth owning.
Yeah, cool, awesome.
So we'll have a product that helps business owners go on that journey, we're just sort of testing it out now with a couple of very early stages, and getting some feedback from them and refining the process. And yeah, we're looking forward to launching that.
Awesome. And what sort of takeaways would you give to a similar business owner in your situation, where you've had some pretty good days? You've actually had good trajectory. How do you stay grounded in all that? How do you keep that vision and kind of keep that edge?
Well, I normally try and leave the office at 5 o'clock, and I'm lucky that my house is about a kilometre, so I normally walk to the work. And then as soon as I get in the door, I'm handed a 7-month-old baby who normally has a pooey nappy, and a 2.5-year-old who's just dad, and then they don't care about work, they don't know anything, and they just want your attention. And right now, my 2.5-year-old's just into puzzles, and he just wants to do puzzles after puzzles. So very quickly, I'm laying on the ground just doing puzzles. So that keeps me pretty grounded straight away. And I'm lucky I've got a really supportive wife who does a lot of things around the house as well. But I think for you, for me, it's knowing like why I do all of this and what's the purpose and what's the drive. And I think you asked me before, what's that vision? And for me, I'm still trying to figure that out after going through one of those growth cliffs and getting to the point that the business is now.
So it's almost like you need to reframe, right? You're
Absolutely.
like, okay.
Yep. Yeah, and funnily enough, later this afternoon, I'm actually doing some work with an advisor and going through that myself. So the process that I described just before, I do that process with someone else to take me through it too. So on a slightly different level. But I think having that external opinion where you're not judged, where you're supportive, where you've got someone else's experience and ideas coming in, that's crucial, right? So for me, it's a bit of a reset, but I do know that I love business. I love our clients. I love what we do. I love our team. We've got so much good stuff going on and feel really supportive. Just enjoy being able to help our clients, ultimately get them to be compliant, give them clarity, get them to pay less tax, to make more money and to get ahead faster. And if we can deliver on those, then it's pretty satisfying. It's very satisfying.
Totally. Awesome. Well, thank you so much for coming on the pod. I really appreciate it.
Oh, thanks for having me, Charlie. Good to chat.